Hello, my dear students. How are you all? Let's add value to your knowledge account today. I'm Dr. Bharati Sunil. Welcome to Finance and Accounting Academy channel. When you decide how much you want to spend on your monthly mobile recharge, that is one type of economics. And when the government want to change the petrol prices across the country, that is another type of economics. That's completely different type of economics. But why are these decisions so different? And how do they both connect to create the economic world we live in? Welcome to today's video. And today we are going to understand two main branches of economics that explain everything from your personal budget decisions to national economic policies. By the end of this video, you will definitely understand when we are talking about microeconomics and macroeconomics. And you will see how both of these work together in your daily life. So let's break down microeconomics and macroeconomics with simple examples that will make these concepts crystal clear. Micro and macroeconomics. Microeconomics. It studies the behavior of individual units like person, business. In microeconomics, we can understand the behavior of individual, or you can understand the behavior of business. Like how a bakery decides the price of a cake, or how a particular bookshop wants to decide its book cost during June month, how the same bookshop wants to sell the same books in the month of September or October, because based upon the depend how the business owner is making changes, that is completely individual, means that is called what? Micro, means it's called microeconomics. Now we'll come to macroeconomics. What is macroeconomics? It looks at the whole economy as a system. Like how does inflation affects everyone? Macroeconomics means it applies macro, means it applies for the whole system. It is not applied to only a single person or single business, but it applies to the whole system. Say, for example, if inflation rate is increasing in India, means it affects the total population of India. So that's called what? Study of economics in macro way. That means studying the total system economics is called macroeconomics. So in macroeconomics, if the inflation rate is increasing, it affects the purchasing power of the individual, right? So that means it is affecting the total system individuals, means the total Indians purchasing power will be affected by the inflation rate. So that is called macroeconomics. Now we'll understand clearly what is microeconomics and what is macroeconomics. Here I want to explain in four ways. First, I will explain with meaning. What is the meaning of microeconomics? It is study of individual units. So how can you understand here as study of individual units? Say for example, pocket money usage of student. Every student generally will get pocket money, right? So here, how you want to spend your pocket money on your needs. Say for example, you want to purchase books, you want to go for a movie, or you want to go for playing cricket. For that you have to spend some money, right? Or you want to go for dinner. For all these expenses, how you want to plan and manage your pocket money. It's called what? Microeconomics. Means using the limited resources, how you want to allocate for different expenses. It's called what? Microeconomics. The same way, if the canteen person is increasing the cost of tea, then what you will do? You will change your preference from tea to coffee. Why? Because here resources are limited and we have to allocate our resources in optimum manner. So that is a decision of individual. So here it is called study of individual units. Here individual units means here we are talking about a student. So student is called here individual unit. Now coming to the macroeconomics, study of entire economy, means here we are studying about the entire economy, means here we are studying about the India's unemployment, or India's GDP, or India's national income, or India's inflation rate. Means it is not limited to only one person or one company or one state or one particular village or one particular town. It is applied to the total India. Say for example, if unemployment rate is increasing in any country, then what the economists will do, they will study about industrial slow growth, or why the companies are not able to provide employment opportunities to the people in the country. So they will study the reasons for the entire economy. See, if inflation rate is increasing, it will affect the rates of all the different products, right? Say food prices will increase, transportation prices will increase. In different ways, inflation effect will be there in the whole system of India. So that's called what? Macroeconomics. So microeconomics meaning is what? Study of individual units, and macroeconomics means study of entire economy. Next, coming to the focus. Here what we are studying, say here we have taken the example of a student. Say for example, here a student want to purchase a laptop. So here he has to decide which type of laptop he want to purchase, whether he has to purchase HP or Dell, or he wants to go for MacBook. Based on the resources that are available with him, he will make a decision. So that is called what decision? He is taking only a decision for himself. Or if a company is taking some decisions for its employees, it's called what? Small decisions. Means it is not affecting the entire India, right? So individual decisions, or company decisions, or any single business decision, or any single school decisions, or any single college decision is not affecting the whole system of India. So that is called what? Microeconomics. Focus is only on small scale. It is only for small scale decisions, right? If you come to macroeconomics, the focus is for large scale decisions. Say for example, if a government wants to decide a union budget, how much of taxes it want to levy on particular income group, and how much of budget they want to allocate for different sectors, all this is called what? Large scale decision. Means it is applying for the total country. The tax policies of the government will apply for the total India. It is not limited to only a single individual unit, or single business, or single particular place, right? So is it clear to you? So now coming to the examples of microeconomics. So here, family budget means if a family is planning its budget, it is only limited to that particular family. Say for example, in one family, father is earning, mother is also earning, means there are two incomes in one family. So they can plan their budget according to their income. But in some families, if only father is employed, then how they will plan their family budget? That will be definitely differing. Means here family budgets will be changing based on the incomes of the family, or members of the family, right? So it or single business profit. Say for example, there are different types of business. Say if you take the example of Blinkit, or Swiggy, Instamart, or Zepto. The profit may not be same for all these three. Each business will be having different profits for its business, right? So it's called what? Microeconomics. Now coming to the macroeconomics example. See here the country's unemployment rate and government policies. If you take the government policies, then the government policies will be applied to the total country. Unemployment, if the unemployment rate is increasing, or if the unemployment rate is decreasing, it will have impact on the entire India. Say if India is exporting more IT services to USA, or India is importing crude oil from Middle East countries, this impacts the balance of trade of the whole India. So it is a macro concept. Now coming to the fourth one, decision makers. So in microeconomics, who are the decision makers? Individual consumers are the decision makers. Suppose if I want to buy one watch, here I am the decision maker. I will go to shop and I will decide which type of watch I want to purchase for myself. So here, who are the decision makers? Individuals are the decision makers, and business owners are the decision makers. So say in the last class, I have taken one example. Here a mobile shop owner has to decide which mobiles he has to stock in his mobile showroom, whether it is Samsung phone or iPhones. How he will decide? Based on the purchasing power of the people, and based on the locality of the particular shop. Here decisions will be changing from one business unit to other business unit. So who are the decision makers here? Individuals are decision makers. So how a family head will decide how much of money they want to, how much of budget they want to plan for their necessaries, their comforts and their luxuries. In the same way, how a student will decide how much of pocket money he has to spend for his requirements. So whose decisions are these? Individual decisions or families decisions. Next, coming to the business owners here, each business will be having its own decision. See, Zepto will have its own decision, Swiggy will have its own decision, Uber will have its own decision, Reliance will have its own decision. Means there is no need for all the companies to have same decisions. But here, each and every business will have its own decision in its business policies. So coming to the macro, here government, whatever the decision government takes, that applies to the total India, right? And Reserve Bank of India will make different policies. If, for example, if repo rate is increasing, it will be applied to the total India. All the people who are connected with banks, all borrowers will have impact of repo rate on their loans. If RBI is increasing deposit rates, then it will be applied to entire India. Who are the decision makers under macroeconomics? Government, Reserve Bank of India, and policy makers are the decision makers under macroeconomics. Here I want to show you key differences in very simple understanding. Micro. Suppose if we are just checking Maggie cost, why a particular Maggie is costing 12 rupees? It is called individual. Means it is microeconomics. Say in case of macro, why petrol prices are rising nationwide. So here it is nationwide, means it is macro. When we are talking about only Maggie cost, it is called individual, means it is called micro. But when you are talking about petrol prices, or when you are talking about gas cylinder prices, it is called macro. Now, next one, your monthly expenses are microeconomics. Means we are studying about your monthly expenses. It's called what? Microeconomics. But when we are talking about India's GDP, so whether if the India's GDP is increasing, it is called what? Macro. Say for example, if national income is increasing and the standard of living is increasing, automatically our GDP also will increase. Means it is called what? Macroeconomics. In today's class, we have studied about microeconomics and macroeconomics. I've explained from definition point of view, meaning point of view, focus point of view, example point of view, and decision makers point of view. And also I gave some differences to have quick understanding about micro and macroeconomics. So this is about today's class. You can take screenshot. That's all for today. But learning never stops. If you like my videos, please like, share, and subscribe so that it will reach needy students. Keep learning, keep growing. Thanks for watching. We'll meet in the next video. Thank you.